Good morning, everybody, and welcome to today's Morning Blast. It is Monday, the 26th of January. You join myself and Michael Brown for, as always, a very candid look at markets, what's happened over the weekend as it's Monday, and what to look forward to for the week ahead. It is a very busy diary ahead of us this week, and also quite a bit going on in markets in general. So I will crack on. Just a quick reminder that there's no editing or anything that goes involved in these, so trigger warnings, etc. apply. Nothing we say is trade or investment advice. Hopefully we put a smile on your face. Hopefully we give you some value for your day. But yeah, let's crack on. Michael, how are you?
Very good morning. I'm not too bad at all, thank you, mate. Happy Monday. How are we all?
I'm good, mate. I'm good. Well, I'm not exactly. Actually, I'm feeling a little bit under the weather. I just can't seem
to... heavy weekend or a good weekend?
No, very, quite the opposite of a heavy weekend.
Sorry, just with you, that's my natural assumption, mate.
Well,
Sorry.
no, I can understand that, but no, I just can't seem to shake this buggy illness thing, and it's starting to really get on me tits, to be honest. But anyway, enough of that, man.
Enough of that. It's not a doctor's surgery.
No, quite. I don't want to go into all my rashes and whatnot. Right. Speaking of
sources
rashes,
say you can't catch it twice.
Well, exactly. Patient zero. Speaking of rashes, let's see what Clive Lambert's got to say over on market moves and important levels to watch, shall we?
Yes, let's.
So obviously he's led with gold and silver going parabolic this morning. More from him in a second on that, and also more from us on that in a second. The S&P posted a doji candle on Friday and gap down overnight, but it's fully recovered already. Buy dips, yes, do that. Exactly that.
Yes, that is advice.
Close your eyes, buy the dips. DAX futures held Marabou's support at 24,847 overnight, so that's bullish technically. Eurostoxx 50 futures still holding above support at 5,925, but is still to fill the gap from last Monday, which is up at 6,019. FTSE futures didn't do anything to confirm Thursday's dark cloud cover candlestick after looking your book for that one. But apparently it's a reversal, so maybe no storm brewing there yet. Sorry.
Oh, Clive.
Bund futures set a weaker tone on Friday, but a small bit overnight. Gilt's down to Fibonacci support at 1995, but kicked higher this morning, early doors. The reason they kicked higher is because Burnham potentially was off the table, and as we know, that would be even worse in terms of economically.
That is true, although, as our good friend Batesy actually pointed out a moment ago, the move is kind of in keeping, not only in terms of direction, but also magnitude with other EGBs this morning. So yes, that's in the mix, but it's not exactly outperformance.
So it's not exactly like the premium that was baked in is just being removed then?
No. That premium's still there. We'll talk about that in a second as well, actually.
Cool. Dollar yen, that's down to 153.80 overnight after posting a big slug of a red candle on Friday. Eurodollar, well bid on Friday and again this morning. So dollar bears are bossing for now. Got over to gold and silver, the yellow metal, seen off 5,000 this morning, getting up to 5,107 at 9 so far. Silver, last printed, well, when Clive was last writing this up, was 109.32. Could be fucking anywhere by the time you listen to this.
Could be about 200.
Could be 200, could be 20. There are now, these are obviously going parabolic now. Silly season is here. Time to roll out and the stop that it's silly meme, which is the first time I've ever seen the meme, but Clive said it to us this morning. There you go. What else? Platinum and palladium are coming along for the ride as well now, but slightly less enthusiastic and exuberance. I wouldn't mind if copper could join them because that's something I am in. Brent, how's the
talking your own book there?
No, I need to go see a doctor, so I thought Dr. Copper. Way. Brent.
Oh, you know I fucking hate that.
Yes. Brent held support at 64.34 on Friday, and WTI posted a recent slug of a green candle. He's used slug twice today. I'm not a fan.
Anyway, that's poor. He needs to sort himself out.
He needs to get onto other insects, like maybe a millipede.
Get a thesaurus.
Yes. Where is WTI? WTI posted a decent slug of green candle, 60.47 to 60.56, now a key support. Henry Hub still doing what it does. We gapped up this morning. Yeah, the weather looks like it's going to be dragging on sometime in the US.
We're up, just for context, we're up 20% already this morning on the gas.
Yeah, it's a one to watch on that as well, especially just a bit of a warning. If people are looking to trade this on retail platforms, especially if they're using...
Don't!
Well, no, quite. Originally, first point, don't. Secondly, you need to understand that if you're trading CFDs, it's like a hybrid mix of where the front month is trading. And at the moment, we're in the roll. And obviously the technical front month, which obviously has got dying amount of open interest, people should be rolling into the second month now, which means that your CFD could actually be losing value because it's slowly rolling down into the other price, where the gap between the front month and the second month is so great. So again,
that is a very good point, actually.
Well, don't sound so shocked when I say good points.
Well, no, you are spot on. Most CFD cash products, and this is actually all commodities, not only nat gas. The majority of them are a blend of the front and second future with then an adjustment in there to adjust for the fair value of turning it into a cash price. So you're absolutely spot on. As contracts roll, that has an impact on the quote unquote cash CFD or spread bet price that you may be trading with your retail broker.
Yeah, exactly that. Like, it doesn't really matter if the front and the second month are trading exactly the same price. In fact, it doesn't matter. But when you've got, 100% difference between prices, which is what we've had with nat gas and gas as well. When that roll takes place, you do start to see your price being eroded, even though you look at the screens and both the front and second month have gone up. So, I understand why people that aren't educated in this get very kind of miffed. But anyway, Henry Hub's still doing what it does, gapped up this morning.
And that's not, sorry, just lastly on that, before, because I know this is where everyone will go, and I am talking my book here, that's not your broker trying to fuck you over. That's just the mechanics of how these products are priced. Yeah. So get that idea out your head for a start.
Exactly. It's been the same since CFD front month.
30 odd years ago or whatever.
TTF, European gas, gapped up and printed 43.48 in early trade. 40.30 was Friday's high, so the gap is support. Corn, wheat and soybeans all flashing short-term buy signals here since we last wrote, which is good because I'm in corn now. Just one thing on TTF gas. One of the reasons why that potentially has been supported is there's been a lot of chatter that one of the reasons why US nat gas is basically everyone scrambling for supplies because that they've been shipping as much as they can out of the US, and that's why storage numbers are lower than they traditionally are. So, potentially some people could be saying, well, look, after this storm, they might be more inclined to kind of keep some back in reserve. But there's a lot of moving parts at the moment, and everything's done on the weather, so keep an eye on that. But anyway, Michael, what's happened over the weekend? Well, on Friday as well, I guess.
Yeah, indeed. Quite a lot, to be honest with you. It's 8:30 Monday morning, and I'm already wondering whether it's too early to go to the pub. It's going to be, well, it was one of those weeks. It was one of those weekends, and I think it's going to be another one of those weeks this week. Where should we start? Let's start with Friday, actually, and with the yen, because obviously we mentioned what's going on in the yen in quite some detail on Friday's recording. So do go back and have a listen to that if you haven't already. According to Dario Perkins, we were very insightful, surprisingly so. So there you go. That's a ringing endorsement for us. However, of course, we did have that big surge in the yen early doors on Friday morning on what was reported to be a rate check carried out by the Ministry of Finance, which took us from about 159.25 down to a low of about 157.35. And that was kind of where we left it on Friday, because at that point we didn't have any more to say. Nothing else had happened. Following that, we heard some comments from various Japanese officials, including Finance Minister Katayama and the chief FX diplomat Atsushi Mimura. What a name that is. Although I say we heard comments, neither of them actually made any comments about what's going on in the FX market. However, although dollar yen did then stabilise, we saw some more interesting developments in towards the close, around about 5:30 on Friday night. And I do think that this timing was deliberate because all of London would have gone home and liquidity would be relatively low. Chatter began to surface that the New York Fed had carried out a rate check in dollar yen on behalf of the US Treasury. Now, of course, this has got the people in tinfoil hats very, very excited. The market reaction was pretty predictable. Dollar yen was trading at about 157 before news of that rate check, and we ended the day at about 155.5, and we then built on those gains, and we're trading down about 154 this morning. I think it's very important to remember here that although it sounds interesting, the New York Fed carried out a rate check. It is unusual, yes, but it's not unprecedented. And I think it's important here to take very, very significant heed of the second part of that sentence, which is that we have seen instances before where, for logistical reasons more than anything else, basically because of time zones, the New York Fed have actually conducted the trading operations that the Bank of Japan would traditionally conduct in a round of yen intervention that, again, is coming at the direction of the Japanese Ministry of Finance. So I think what we've seen here is basically, to cut a long story short, the Ministry of Finance ring up the Treasury in the US and go, lads, can you do us a favor? It's a bit late here in Tokyo. Do you mind carrying out a rate check for us? I think that's what we've seen, as opposed to, sorry, I was just as opposed to what some people are saying, which there's a chance of this. I think it's a slim chance, which is that, Treasury Secretary Scott Bessent has gone, I want to be an FX trader again. Let me find out what's going on in the yen. There is a possibility it's that, but I would very much lean against that at this moment in time, I think. I don't know what your thoughts are on that, Ron.
I think exactly that. Yeah, it's not unprecedented. And in fact, I can't remember who the BOJ geezer that was in charge at the time, but he had quite a preference for doing these in the US hours, and it was old to use the Treasury to turn around and do that.
Well, we did have one. I can't remember when it was either. It was either 2022 or 2024, and I'm pretty sure they came in and just smacked it down about 5 minutes after a US CPI figure.
Yeah. This is exactly that. And it's not unprecedented. It tends to be when the Japanese, when they want to do it in New York session hours, they go, well, do you know what? We might as well use New York banks. Do you know what? We might as well get the Treasury, and the Fed or whoever, however you want to phrase it, to do it for us. So it's not unprecedented at all. It's what they do. It's just the mechanics of how they do it when it's US hours. One thing that has usually in the past been the case, though, is the fact that this, if a bank was rate checked, they were basically told under strict instructions, do not tell anyone. Now, obviously, it got out because...
I was going to say, they always did anyway.
Because, someone told someone at another desk, someone or told their mate, or you might want to keep an eye on yen, and then it gets out. But this time, it appears from the notes we've seen, well, there's been going around, that banks weren't told that they needed to keep it a secret. I was speaking to our good friend over the weekend, or yesterday evening, Brent, over Black Lion on Twitter. He's a very good follow. Ex-Tomcat pilot, there you go. But he was asking the question, why...
He will make you feel quite inadequate. Ex-Tomcat pilot, now star trader.
Yeah, exactly that.
Lovely chap.
And a top guy as well. And a top bloke as well. So basically 3 things that I'm not.
Better than any of us ever will be.
Yes, pretty much. But he was asking, what do I make of it, the fact that they're allowed to talk? And my reasoning basically is I think it's a good idea because in the world of, the world we are now, social media and whatnot, speculation just goes rampant. There's a bull market in bullshit basically because of things like crypto and stuff. So it makes sense that they want to get on top of the misinformation because before social media, you might have 1 or 2 people talking about it in the pub or over in specific circles on Bloomberg chat or whatever. But now you're dealing with everyone on Twitter talking about it. And a lot of them have no fucking clue what they're talking about, which is why hopefully you're listening to us to give a bit of clarity on stuff. So it makes sense to me that, they want to manage the communication against misinformation.
Yeah,
because it doesn't move the dial at all. They're just literally just get in front of it and say, look, guys, without this speculation, this is actually what's happened, and go back to your normal day.
Yeah, no, I fully agree with that. And I think just in terms of looking forwards, in the very short term, this quite clearly tilts the balance of risks massively out of the favour of being short yen because, as we said on Friday, these are like the last kind of warnings you tend to get before any intervention might take place. Do you really want to sit short the yen if you're going to end up maybe 5, 6, 7 big figures offside while you go to sleep? And that's what they're trying to do ultimately.
Yeah, exactly that. And that is the whole point of rate checking. And this is why it's even more important to make it public.
Yeah, the one caveat. Oh, sorry, go on.
Well, no, it's literally, but I just wanted to kind of break it down. Literally to make it that simple. They're just giving people a nudge and say, by the way, we are keeping an eye on this. We know everyone's trying to short the yen into non-existence, but just to make you aware, we are still here. We are still picking up phones.
Yeah, exactly that. And I think it's going to be interesting to see what happens with the yen this week, because I think there is an argument that says, okay, they've flushed out a lot of speculation. They've given things a bit of a slap down with some of this jawboning. However, as time goes on, if they don't then follow that up with anything, there is an argument that says actually maybe the market's going to start to test their mettle a little bit. And the market's going to go, well, actually, do you know what? Is your pain threshold 159? Is it 160? Is it 161? And that could give yen shorts a little bit of encouragement. So we'll see how that pans out throughout the week ahead. In terms of other bits and bobs from Friday, just quickly, and then we'll wrap up over the weekend. In terms of economic data, we did have some PMI figures out of the Eurozone and the UK. In the Eurozone, the composite PMI remaining unchanged at 51.5 in January, while here in the UK, the composite PMI rose to 53.9, up from a prior 51.4 and a 21-month high. Thank you, Rachel. I never doubted you. Quite why that PMI came in so hot, I don't really know, but it does feel like one of those where it doesn't really pass the sniff test, if you want to call it that. Like, sentiment around the UK is so poor.
Do you know what?
And then to get a 2-year high on the PMI, it just doesn't really feel right.
It felt to me, and I'm not saying it's going to be the same as the way, but remember during COVID when PMI started actually going up due to one of the metrics or how it was measured?
Yeah, it was supply delivery times.
Yeah, basically, because things are taking longer to be delivered, the traditional way of PMI means that must mean there's a lot of demand, but it was just that no one was making anything. I'm not saying it's the same now, but it does feel something's up.
It's one of those where I'm not going to buy it until I see the Fed data. And if the Fed data is also at 54, then great. Maybe the economy is doing better than we expected and I was completely wrong. But if the Fed data isn't, then we can just kind of dismiss what we got on Friday. In terms of other notable events into the weekend and over the weekend, Bloomberg running a story on Friday night that Rick Reeder, apparently his support from financial market, the fact that he has openness to making changes at the Fed, and also the experience he has on Wall Street is seen as, quote, a boon for his chances of getting the Fed chair job. According to these sources they cited, I will quote, Rick Reeder is seen as looking the part of a central banker, which in Trump's world is everything. So, maybe he is going to get the gig. One thing to be aware of, obviously we do have a Fed meeting on Wednesday. I was kind of semi-jesting when I suggested this at the desk the other day, but I would not put it beyond Trump to announce the next Fed chair during that meeting, just to try and take some attention away from Powell.
Do you know what? Or just before.
Yeah, it feels like the sort of shit he would do, basically.
If he does it just before, right? Immediately, that's what the press conference is going to be about.
Well, you rip up the script for the presser, don't you? Yeah, exactly, you're absolutely right. Yeah,
exactly that. No, an interesting one. But yeah,
I've got no intel on that, by the way. I could be completely wide the mark.
We probably are.
It just feels like that's the sort of thing Trump would do, to be completely honest with you. So anyway, we'll keep a close eye on that. As for other things over the weekend, we have Politico citing sources. Apparently the Trump administration are potentially looking at a naval blockade to halt oil imports into Cuba. This is a risk that we flagged last week. Of course, where is Trump going to go next geopolitically, and the week before? Sticking with Trump over the weekend, he threw out another tariff threat, this time towards Canada, saying that if Canada makes a deal with China, they will be hit with a 100% tariff. I think it's important to recognize here that a lot of the vast majority, I should say, of trade between the US and Canada is actually exempt under USMCA anyway. And of course, this is probably just a negotiating tactic, and we all know how this ends at this stage. But nevertheless, one to watch. Actually, I don't think it's a surprise that the Canadian dollar has completely taken that in its stride. It's basically unchanged this morning. And lastly, from me for the time being, as Ryan alluded to in terms of the gilt market, Andy Burnham, he sought permission to enter the selection process to run in the Denton and Gorton by-election on Saturday. And then by Sunday lunchtime, Labour's ruling National Executive Committee decided that they will block him from running for that parliamentary seat. I wonder how it feels for Burnham to be in hock to the NEC. Having said that, I do feel like Starmer is probably shooting himself in the foot a bit with this one. It just comes across as very, very weak to effectively gang up on and block someone who is likely to be your biggest challenger for the leadership from standing for a parliamentary seat. It just doesn't really look right. It doesn't feel right. And actually, I think it's going to embolden a lot of the rebels within the Labour Party to go, well, actually, do you know what? I think you're almost running scared from a challenge. I still don't think I still don't think anyone is going to move prior to the May elections. I think if you're Wes Streeting, Angela Rayner, whose positions have been massively strengthened by this, you're going to naturally go, I still want the current guy to own a defeat, but you've got much less incentive now to wait until after, soon after those elections, you just strike. So I think this has probably hastened Starmer's own demise, despite the fact that him and his advisors are going to think it's some sort of fucking masterstroke.
Yeah, well, quite. This is the problem, right? And again, we were going to talk about gold, but I think as we've got to do the week ahead as well, I think we might have to move the gold up.
We can shelve that, yeah.
But yeah, in regards to this Burnham-Starmer issue, it is, there's always a tweet. It was only a few years ago that Starmer was basically saying that the NEC shouldn't be making decisions like this.
Oh no, is that true?
Yeah.
For fuck's sake.
It literally says the NEC needs to be removed of power for these kind of decisions.
Oh.
And lo and behold, and obviously their excuse is that it would take too much money and an inconvenience to the people of Manchester to vote again for a mayor, etc. But yeah, it's shambolic. I know Betfair last night was putting Keir's demise this year at about 1.88, so that's odds on. But I make you right. It feels like to me that Wes Streeting is the obvious winner here because if those don't know, he's in charge of the NHS, so they give you a guide to how shit he is, because that's not being changed anytime soon. But yeah, it's just one of those things that, like you said, anyone that takes power before May, which is when we get the local elections, would be fucking crazy, because you're not going to turn it around that quickly. There's probably more scope for Labour to fall in the polls if there is a bitter and twisted leadership campaign or battle, because anyone that was on the fence would go, oh, enough of this shower shit, I'm going to vote for whoever. So it strikes me as they're going to probably keep it like it is, but that doesn't mean people are going to be quiet until then. I think what we could see now, and May's only a few months away now, we're basically in February. Yeah. What we could see is at least one or two main contenders coming out. At the moment, it's all been like rumours and that kind of thing. But no, I think, as you said, Wes Streeting and Angela Rayner are the two top people for it, which is depressing as fuck if that's the best people we've got for the job.
No, I agree. And I think the things, there's a few things to watch, actually. Just to cover that, first of all, I think what's going to be interesting is how the relationship between those two develops. Do they actually, and obviously all of this horse trading will take place behind closed doors, but is there a scenario where they actually end up on a joint ticket? Because in order to win a Labour Party leadership election, you need to appeal to the Labour membership, and the Labour membership are a hell of a long way to the left of where the Parliamentary Party are. Yeah. So someone like Wes Streeting, for example, appeals to a lot of MPs, and actually, he probably would do a better job than Starmer. I think he's tough to do worse, but on his own, he's not going to appeal to the Labour Party membership, because they would view him as too centre or too right wing. So do you have a sort of Streeting-Rayner joint gambit to try and win the leadership? We can game all this out as we move towards May and after May, and I'm sure much more info on that front will come out. The whole decision around Burnham, yes, it's given a bit of relief to gilt, because obviously this is the chap who ran around saying, I don't understand why we're in hock to the bond market. Well, frankly, mate, we spend more than we earn, which is why we need to borrow. However,
and he wants to spend more.
Well, yeah, quite, because he wants to nationalise basically everything and reclaim dividends and God only knows what else. What?
Sorry, no, it blew my nose.
Oh, sorry, I thought that was a gasp of astonishment. I do think, though, that, and I'm no sort of political strategist, but I was talking to Lintz earlier, actually, our good friend who's at Bloomberg now, and I was saying, actually, I think Starmer's been stupid because he should have let Burnham stand. And what you do is you let Burnham stand, and there's no actual guarantee that the local party would select him as the candidate anyway. If they did select him as the candidate, there's no guarantee that he would have won the by-election, because it is going to be a very, very close contest between Labour, Reform, the Green Party, and potentially George Galloway, who's now sniffing around the constituency as well. To stand in a by-election, he'd have to resign as mayor, so that would be gone. If he lost the by-election, his political career is over. If he wins the by-election, great. First thing you do, put him in your shadow cabinet.
Yeah.
And at that point, you have gone, well, fine, you've stood for Parliament. You've put on Twitter in your letter, I will be a team player. I'm now making you Shadow Justice Secretary, whatever it is. Be a fucking team player. Well, that's the way you try and nullify that threat. And actually, while he's at it, make Streeting Shadow Chancellor.
Well, let's not get carried away. But no, I make
Well,
right.
no, but in terms of shoring up your own position, that would be the way you do it.
Yeah, sort of surround yourself by your enemies, because at least then the people that are wanting these enemies in feel like they've got a bit of a win out the door anyway.
Yeah, and you basically go, fine, if you want to challenge me, but you're going to do it from cabinet, and it's not going to look good for you.
I do like, again, over gaming this, but say it is Streeting or something like that comes in to kind of lead the contesting Starmer of Starmer. I wonder what kind of mechanisms are in place where he could actually then bring Burnham onto his side and say, look, if you are voting for me, you're also getting Burnham in the cabinet or something like that. Again, there's a lot of things we can overplay on this, and we can look at, but it is, the only good thing that's happening at the moment is French and German politics are making us look good still.
Oh, shit. Yeah, actually, do you know what? Clive's absolutely right. I did say shadow cabinet. Yes, Labour are the government. I guess it shows how little governing they're doing that it was so easy for me to forget that.
There you go. But look, enough of that. What's going on this week?
Let me dig myself out of that horrific hole I've just put myself in. What's going on this week?
A lot. Hoping for better times ahead, when Labour are in power.
Can't fucking get worse. Anyway, as for this week, then, let's do this relatively quickly. There is quite a lot going on. In terms of monetary policy, we've got 3 G10 central bank decisions this week. The FOMC on Wednesday night set to stand pat, holding the target range for the Fed funds rate steady between 3.5% and 3.75%. Also on Wednesday, we hear from the Bank of Canada. They're set to hold rates steady at 2.25%. And then the Riksbank on Thursday, they will hold rates steady at 1.75%. Besides those monetary policy decisions, it is a really, really busy week of corporate earnings on Wall Street this week. In fact, it's the busiest week of Q4 reporting season. Around about 20% of companies within the S&P 500 will report this week, and the market cap of those firms is somewhere around 45, if not 50% of the overall index. Of course, market focus will fall primarily on the mega cap tech names. We hear from Microsoft, Meta, and Tesla. They report after the market close on Wednesday. I'd love a word with whoever put that after the FOMC, because you've got some sort of warped mind. And then on Thursday, after the market close, we hear from Apple, who will obviously be in focus as well. Besides that, it's quite a busy week of Treasury supply this week. We've got a 2-year auction tonight, a 5-year auction on Tuesday, and then a 7-year sale on Thursday. It's also quite a busy week of economic data as well. Admittedly, it gets going in relatively sluggish fashion today and tomorrow, but Wednesday we get the latest inflation numbers out of Australia. Markets are at 50-50 at this point for an RBA rate hike at the February 3rd meeting. If we were to get a hot Q4 inflation report, then quite clearly that pricing is going to go to 80, 90, if not more, in terms of that rate hike. Besides that, on Thursday, we have your favorite data release, Ryan, the Tokyo CPI numbers out of Japan, which will attract even more attention than normal, given everything that's going on with the yen and with JGBs at this point. And then Friday is also a busy day as well. We get our first read on regional GDP numbers out of the Eurozone, and also the Eurozone-wide data, which is set to show the economy growing by about 0.2% in the fourth quarter of the year. We also get flash inflation numbers from Germany, GDP from Canada, and PPI out of the United States. Also, big oil earnings on Friday as well, and any commentary that they issue around Venezuela will be of note. Of course, that brings me nicely onto geopolitics, which will remain in focus, not only in terms of Venezuela, but also Russia, Ukraine. Those peace talks in Abu Dhabi wrapped up over the weekend, with another round to be held this weekend. And of course, in the Middle East as well, where US military buildup continues and the potential for some sort of intervention in Iran remains. And along with all of that, we've got news flow around tariffs, this latest threat towards Canada. We've got the potential announcement of a Fed chair, and God only knows what else Trump might want to do throughout the week. So I certainly don't think anyone is going to be bored over the next 4 or 5 days when they're sat at their trading desks.
Indeed. Although I hope in tomorrow's show I get to say a little bit more, because I feel like this has been the Michael Brown show today, but there we go.
Well, I'm going to go for a long lie down in a dark room now. I feel slightly out of breath after that.
Yeah, I'm not surprised. Just one final thing to note. Like I did mention last week regarding gold and silver, about how we'd most likely see it go parabolic and absolutely stupid before it does eventually pop. I don't think we're even there yet. So please don't be looking to short this. It's going to be very, very expensive.
Yeah, it's one of those. Sorry, I don't want to say it's the Mike Brown show again, but it's one of those where if you've been long for a while, you probably need to think about taking some profits.
Yeah.
If you are thinking about trying to get in front of this, then just don't. Just wait for some signs that we might be consolidating a little bit. You're never going to pick the top. You are never going to pick the tops at the absolute fucking tick. If you're 50 or $100 off it, and we're talking about a 20-30% move, does that really matter? No, exactly. It doesn't. But you're going to have an account still, which otherwise you won't.
Just one thing to briefly say, and I think we do need to talk about this more tomorrow. Like, obviously, we've got a lot of option expiry clustering around 5,100 and 5,200. I mean, if you are looking to pick random numbers to kind of think, well, maybe this is where it kind of gets stuck at, you would be looking at stuff like that, because there's no technical levels above, because we've not been up here. Clive will be shaking his head and say that's.
The Elliott wave people will be out.
Oh no, exactly that. But no, just this. Oh no, he's just called me a prick on WhatsApp. There we go. So on that note from Clive, look, everyone, we hope you've had a great weekend. Stay out of trouble. Be safe. We'll probably talk about more. Sorry, I'll start again. We'll probably talk more about gold tomorrow. But for us, from me, from Michael, from the bull market and bullshit,